Joining us now is Daniel Ammann. He is the Chief Financial Officer of General Motors. Dan, this is the first set of numbers for your position, your new position as CFO. GM beating the top and the bottom line thanks to strong sales in the U.S. and China. Some analysts were highlighting concern about the cost of the stronger U.S. sales. Are you comfortable with how much you're discounting to see those sales numbers rise?
Well, I'd point you to the April sales results in addition to the first quarter results, which have been very strong both on the top line. In April, we posted the lowest incentives that we've had yet as the new General Motors. We put in place a couple of weeks ago a price increase that's effective May 2nd. So we're very comfortable with our ability to both offer value to the customer in terms of our vehicle portfolio and to get paid for that value. And if you look at April in particular, 19.8% market share with the lowest incentives that we've had as the new General Motors. So we feel very good about the portfolio of vehicles that we have on offer and the receptivity they're getting from customers.
Dan, Steve Gursky told us a couple of months ago that GM's approach to high oil prices would be discounting. Oil is still above $110 a barrel, and yet you're backing, as you were just saying, you raised prices, so I'm taking it that you're not discounting as much on a percentage basis. How does that square with what he told us earlier?
I'm not sure exactly what he told you, but the way that we're looking at it is we have on offer today. What's different today at GM relative to one or even 3 years ago is that we have a much broader portfolio of vehicles on offer. And when we have a high oil price environment, it's not just about consumers moving from the large SUV to the small car. It's about people moving into crossover vehicles where we have a very strong position. The GMC Terrain north of 30 miles per gallon in a crossover. So it's about having the full breadth of the portfolio, and it's about giving customers choice across that whole portfolio, and that's really what's driving our sales results both in the first quarter and what you saw in April as oil prices continued to move up. So we have the best portfolio that we've had on the road and on offer to our customers in a long, long time.
Dan, what about the perception that you're behind Ford as far as these fuel-efficient vehicles go?
Well, again, I'd look at the results in the marketplace, and I think we have really the broadest portfolio on offer out there today. To give you a sense of some of the fuel-efficient offerings that we have, we obviously have the Chevy Volt, which is really a breakthrough technology, the extended range electric vehicle. We have the Chevy Cruze, which has been hugely successful for us, both in the first quarter and in the last month in particular. We launched the new Malibu at the New York and Shanghai auto shows a couple of weeks ago with e-assist, which will give that vehicle small car fuel efficiency in a mid-sized vehicle. So it's really about a whole host of different fuel-efficient technologies right across the product portfolio.
Dan, notwithstanding all of those choices consumers have, is there an oil price at which GM sales growth would stall?
I think from our point of view, what we're looking at is we're assuming that fuel prices, higher elevated fuel prices, are here to stay. And the way that we're going to manage that again is with the broad product offering that we're bringing to customers. So we're hopeful and believe that will really help us drive oil prices, drive vehicle sales, notwithstanding where oil prices are.
I just want to be clear that let's say oil goes to $140 a barrel. Nobody's saying that's going to happen in the next couple of weeks, but if it does, I mean, what kind of an impact would that have on GM sales? Surely there has to be a breaking point for every automaker.
Yeah, and like I said, we'll look at the supply-demand equation as we go through the marketplace. We're seeing some mix shift. We saw a little bit in the first quarter. We saw a bit more in April. We'll adjust production between cars, crossovers, and trucks as we go along. But right now, the overall total demand in the industry, there's a lot of pent-up demand. You saw that again in the April sales results. And by having the broadest portfolio possible on offer to the customers, we think we have an offering for everybody that's looking for a fuel-efficient vehicle, be that a larger crossover, be it a very fuel-efficient mid-size car, or be it a small vehicle. And we have more product offerings coming on the passenger car side. The Buick Verano and the luxury small car segment, the Chevy Sonic in the sub-cruise category. Right. So we have a very broad offering and more to come.
Broad offerings here in North America, broad offerings in Europe. You've said you're going to be break even by year's end in Europe. How much pressure does that put on you for the next 3 quarters?
Well, the first quarter we delivered a break-even EBIT adjusted result in Europe, so we've achieved that milestone in the first quarter, and we expect to be able to deliver that result for the full year. So we're off to a good start on that front. And again, the European restructuring story, it's a really two-part story. There's the cost side of the story, which I think people generally understand, but it's also once again about the product side of the story. We have new product introductions in Europe that are going very well and that are delivering good results for us. So there's a revenue side to the equation, there's a cost side to the equation. We saw that result, the break-even result achieved in the first quarter, and for the full year we expect to be break-even EBIT adjusted before restructuring charges.
Dan, thanks so much for joining us. We're both so glad that you were here. Dan Ammann, Chief Financial Officer of GM, joining us from Detroit.